DailyFX BYOA contest for week 19. This is the trading week of July 31st to August 5th, 2011. The trade I'm looking at this week is the Australian dollar versus the US dollar. I'm looking to short the Australian dollar this week at 109.8, and I've got two targets that I hope to hit by the middle of the week or before. One of them is at 108.7 and the second one is at 107.9. I'll come back to those numbers in a little bit, but let's just talk about the analysis of this first. As you can see here, I don't have a lot of indicators here on my chart. I rely primarily on price action and kind of what the price action is telling us here. So as you can see here, I wrote confluence here at the top. Last week we had kind of a double top formation going on around the 110.7 level. And we ended up kind of with a break. We had a breakout of this trend line that had been going on since the middle of July, and we had a retest. So a breakout and a retest. Confluence. The reason why I wrote confluence here is because we've got two lines here pointing to the same thing, okay, giving us the same signal, and they're both occurring in the same location on the chart. And confluence is anytime you've got more than one signal, let's say anywhere from 2 to 5 signals occurring in the same location on the chart, and they're all pointing to the same direction or kind of pointing to the same sentiment that you may have as a trader. For example, if you're looking for a bearish move here, a confluence of two lines here would mean that we have a breakout and a retest. At this confluence spot, that is a major sign of resistance, meaning that price action is most likely to fail here at this particular area and continue its bearish move down. So I wrote confluence there. As you can see here, I've got the MACD as well down here, and the MACD kind of showed a little bit of divergence last week. Divergence is anytime you've got kind of a negative signal on your oscillator, meaning although we came up and tested the 110.7 level again on this double top, we did it on a much lower scale on the MACD, meaning that this is just a sign of weakness. This is not this move will not push past that 110.7 level if we're doing it on a much lower level in the MACD. So that was divergence there. Obviously, it resulted in that breakout that we talked about, and now we're sitting here at this retest. So that's about it from a technical standpoint. I don't like to get too deep into all the indicators and oscillators. I think it's very cut and dry. You got a breakout and a retest. This is a highly successful trade setup in my mind. The odds, the probability of this trade is very good in my mind. As you can see here, also talk about the risk to reward. I'll jump into that right now. If we were to enter this trade at about 109.8, the most logical level here would be above kind of this congestion zone and breakout zone right here. That's probably where we'd want to put our stop loss. So we'll put our stop loss at about 110.4. That would give us a stop loss of about 60 pips around there, and we're targeting either 100 pips or 186 pips. So our risk to reward is anywhere from about 2 to 1 to 3 to 1. And I really think it's huge for beginner traders in the Forex that they focus on very solid trade setups that have good risk to reward. Because as you know, if you are constantly taking trades that have either 2 to 1 or 3 to 1 odds, let's say you only trade at about 50% efficiency, you will still profit in the end, as long as you're using the same lot size and such. So obviously for beginner traders, you should always be looking for risk to reward setups that have 2 to 1 or 3 to 1. So that's about it from the technical standpoint. Like I said, the short at 109.8, and I will probably enter this trade here on the open of Sunday. Maybe we'll get a gap below and maybe a retrace back up to 110 around there. But that's where I'll try to enter short. From a fundamental standpoint, I'm definitely bearish on the Australian dollar. We had a big, nice run that kind of led into some congestion and then another breakout up towards 110, 110.7. I think the Australian dollar has certainly kind of had its run now, and I think the risk-off behavior of the market is certainly going to take hold next week with this debt ceiling stuff going on. I know right now there was a framework put in place that hasn't been agreed upon yet, but shows very good likelihood that Obama will probably sign the bill off before August 2nd. Even if that does happen or does not happen, there's just a lot of risk-off behavior going on and a lot of people getting out of the Australian dollar. I don't necessarily see this trade as a strong USD move. That's why it's going down. I see this more as people just getting their money out of the Australian dollar. That's kind of what I see going on here. So that's about it from a fundamental standpoint. And Obviously, you can probably see this move even break below the 1079 level. It really just depends on what kind of week we're going to have next week. We've got some major data coming out towards the end of the week, unemployment and that sort of thing for the USD. So we'll see how this one plays out. But like I said, we're going for 2-to-1 or 3-to-1 risk reward on this. And we may even see a break of the 1079 level. But that's what I'll be shooting for this week. So thanks for watching, and good luck trading next week.